Why construction projects fail, the hidden risk most contractors miss. Today I want to talk about a project risk that often receives far less attention than it deserves. Most construction projects do not fail because of one catastrophic mistake. They fail because multiple small exposures accumulate over time. A claim, dispute, or loss reveals that protections everyone assumed were in place never actually existed. One uninsured subcontractor, one overlooked waiver of subrogation requirement, one missing additional insured endorsement, one contract provision that was never fully reviewed. Individually, each issue may seem minor. Collectively, they can create significant financial exposure. Over the past several years, construction and infrastructure projects have become increasingly complex. Project teams often include multiple tiers of subcontractors, suppliers, consultants, and specialty contractors. Contract requirements have become more sophisticated. Owners want greater protection. General contractors want stronger risk transfer provisions. Developers want certainty. Everyone wants to limit their exposure. The result is a project environment where contractual obligations and insurance requirements are more interconnected than ever. Unfortunately, many organizations still treat insurance as a standalone purchase. The policy is purchased, certificates are collected, the project begins, then everyone assumes the risk management process is complete. In reality, that is often where the risk begins. Let's consider a simple example. A subcontractor signs the contract requiring additional insured status, primary and non-contributory wording, waiver of subrogation, specific completed operations coverage. The subcontractor provides a certificate of insurance. Everyone moves forward. Months later, an incident occurs. Only then does the project team discover that one or more contractual requirements. Now, parties are arguing over responsibility. Coverage questions emerge. Legal costs increase. Relationships become strained. What appeared to be a minor administrative oversight suddenly becomes a significant financial issue. This is why effective risk management requires more than collecting certificates. It requires alignment. Alignment between the contract, the insurance program, project operations, subcontractor management, actual responsibilities assumed by each party. One of the most common challenges I encounter involves assumptions. Contractors assume coverage exists because a certificate was provided. Project managers assume contractual requirements have been reviewed. Subcontractors assume someone else verified compliance. Everyone assumes someone else checked. Those assumptions often remain hidden until a claim occurs. The strongest organizations approach risk differently. They recognize that risk transfer begins before work starts, before the equipment arrives, before mobilization, before the first invoice is submitted. They review contracts carefully. They understand indemnity obligations. They verify insurance requirements. They evaluate subcontractor compliance. Most importantly, they ensure that contractual obligations and insurance protections work together. Because contracts transfer responsibility, insurance finances risk, those two elements must align. A contract cannot create insurance coverage that does not exist. Insurance may not respond as expected if contractual obligations exceed the protections provided by the policy. This is particularly important in infrastructure, utility, energy, industrial, and EPC projects, where multiple parties often share responsibility for project outcomes. The more stakeholders involved, the greater the importance of clearly defining responsibilities and confirming that risk transfer mechanisms are functioning properly. When a loss occurs, the first question is rarely, "What happened?" The first question is often, "Who is responsible?" That answer is usually found within the contract, the insurance program, the project documentation. Organizations that understand this reality are often better positioned to avoid disputes, reduce financial exposure, and navigate claims more effectively. The goal is not simply purchasing insurance. The goal is to build a coordinated risk management strategy that supports project execution. Because successful projects require more than engineering, scheduling, and construction expertise. They require clear accountability, clear responsibilities, a thoughtful approach to contractual risk transfer. At Montridge Insurance Services, we work to help align contracts, insurance requirements, and project risk strategies. Contractors, developers, infrastructure firms, utilities, energy companies, environmental contractors, industrial operators. If you'd like additional resources on, please visit the link below. Contractual risk transfer, additional insured requirements, indemnity provisions, project risk management.